Following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the July 7th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I can make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this. During this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, well, we've got you covered there too. Let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on a wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, mixed bag out here. The Dow's up 42. The S&P's up 9. NASDAQ just went slightly negative, down a point. Russell's off 14. Semis are down 45. Tranny's up 73. New York Stock Exchange up 10. Spot volatility is up 20 cents. 1664 still well below its 50-day exponential moving average. You've got gold up $7, silver off a nickel. Leading the charge dollar-wise, the upside, New Egg Commerce up $29 or 108%. Boston Beer up 27, 3%. Chipotle 24, 1.5%. Amazon 24, less than 1%. Restoration Hardware 2.5% or 17 buckaroonies. If we take a look at Booking Holdings, it's off $50. That's nearly 2.25%. Market taxes off 28, Novak's off 25, Tesla's off 16, Mercado Libre down 12 buckaroonies. Of course, I want to look at what you want to look at. No request so far. So we're going to go with the requests that were inside the Tiger's Den. Then we'll switch back to the equities market. Now, I say requests. There's been discussion in the Tiger's Den. I threw out one commodity, and then I realized that there was also discussions about corn. So one of the charts that subscribers get, there's so obviously many charts that they get on a daily basis, but one of the things that we continue to track are those soft commodities. And this would be the chart that we would be taking a look. Oops, sorry about that. Let me see if I can get back to that soft commodities chart. The system's acting a little slow because I have a number of things that are processing as we speak. Here you can see you've got wheat. Now I've got the September wheat over in the left hand. You've got soybeans, corn. So this is the one that we're going to take a look at. Corn and cocoa. So the two charts on your very right-hand side, I'll just simply expand them both out. If we take a look at corn, and so John and the Tiger's Den is talking about corn might be at a support level. And he's absolutely right. If we take a look at this chart here, we have both rising trend line and TAS market profile. And you see that this market profile is slightly bullish in structure. So that would tell us any close below 526.30 would say, oh, that could be a problem if there were two consecutive closes. But are we back to support? We are certainly back to a support level, and that says, okay, we go take a look at my other charts to see what's going on a short-term basis and so forth. If we take a look at cocoa, we'll expand this out. Now, earlier in the day, when I posted the comment, which is, yeah, it looks like cocoa is forming a couple of different A to B equals CD patterns. Here's the large one that just kind of vanished when I opened up the screen. So here's the large one that starts at the high back on March 3rd. The low for the B point would be May 4th. The high for the C point is going to be the high into May 17th. You're going to see a 1-to-1 A to B equals CD. Now, when I originally typed in one of our dinners, trades cocoa, that was Ruby. And on the daily basis, what I liked about this was it had a hammer candle. It's no longer a hammer candle, Ruby. or anyone else that's watching us. It might look like a hammer candle. It might smell like a hammer candle, but it is not a hammer candle. Why? Because the body of this candle, right now I can already see it is more than twice the size of that wick out there. So no bullish hammer candle, which is what we would have liked to have seen at that 1-to-1 A to B equals CD point out there. So just wanted to throw that out to you. We'll still take a look at the charts. So let's go take a look at, let me get my other charts here fired up, and we'll change screens. So let's go to corn. Now, when we pull up this corn chart here, or the corn charts, what you're going to see out here is this is one that each of you sitting at home right now, can, in fact, trade, which is the ETF for corn. So what you're going to see here, in the upper left-hand side, you're going to see the September contract for corn. You'll see December of 2021, and then you'll see December of 2022. Why is that? Well, because these are equally held with inside the ETF CORN. So for you homers that want to take a trade in corn out here, what you have to do is you've got to be paying attention to those three contracts out there. And so as we do look at these contracts, what do we know? We know that corn on September, the September contract has a TD9 count bottom and price pulling right back into support. That is the bottom of its daily profile. Okay, perfect. So there's a setup. And this just shows also resistance, by the way, 619.25. If we take a look at December corn, that is pulled right back. So remember, when we were looking at that corn chart, we had a rising trend line, the bottom of its daily profile. When we take a look at here, price pulled back to its breakout level, 521. So definitely, so, you know, what you're looking for is for an instrument to pull back to the breakout level. How do we determine a breakout? That's where the TD9s come in. They not only identify tops and bottoms, but they help us to identify where did an instrument most recently break out for whatever time frame it is that we're looking at. In this case here, it is the daily. The corn ETF, CORN, that's over on the right-hand side. I really, even though it's got all the tools out here, I don't spend a lot of time on the tools for that ETF because it is the underlying instruments. So remember, when we have something coming back to a support level or potential bottom on a daily time frame, we like to look at short-term time frame charts. In this case here, I've got the 30-minute charts for each of these. So in the case of the September contract, you see a Rhodes momentum indicator bottom. And right now, price is above the top of that 30-minute profile. So that's an identifier that the September contract has a bottom, or at least should bounce up to its oscillator and change line, 571.44. Look, much easier to trade the futures contracts because you'll have your stops in place, you'll have your targets in place out here. With regard to the corn ETF, we've got to act based upon the information that we see taking place inside of these three corn futures contracts. If we take a look at the December one, panel number 2 out here on the bottom, you also see a Rhodes momentum indicator signal. Price right now taking on the resistance of the top of that profile. So it closed above that, says, okay, I'm ready to roll. It's really December 2022 that I'm most interested in. Now, this is 1/3 of the corn ETF. The reason I'm most interested is because this one has a TD9 breakdown level. And that's at 486.50. We're trading right now at 486.50. So if you can see a close, or really two consecutive closes above 486.50, that would be the first indication that there may be a change in trend for the December 2022 contract. I think that would flow through to the others. But for example, on the 30-minute for December of 2021, you've got to get up to 584.75. So that's too much of a stretch. So right now, you're seeing the patterns. You saw the daily patterns. You see the short-term 30-minute pattern. So this is a freebie. The corn ETF is a buy based upon those signals. Steve Rhodes with TFNN. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 39, S&P's up 8, and we're cuckoo for Cocoa Puff. So we're going to go take a look at Cocoa, and that's what this multi-panel set of charts out here. And the reason why this looked so enticing to me still is, well, what just happened on the daily chart? That's weird. Let me go look at my other futures charts, because that just took a turn. Give me a second here to it may just be a problem with this white background charts out there. Yeah, it is. So I'm not sure what just happened. That must be the NSA. They're back into my system or screwing with us. So it was this daily time frame. Even though on this white background chart I can't draw on the A to B equals CD, we looked at that earlier. And so what you'd like to see is a bullish reversal candle on a daily basis. Now this could generate a piercing candle still coming into the day, but right now we don't have that bullish reversal signal. If we take a look at the other time frames, we also like to see bottom signals. So here on the 5-hour chart, it's clearly A to B equals CD patterns to the downside. You do have your bull sash candle right now that's confirming that, and a close above 23.19 would be helpful. If we take a look at the 240-minute time frame chart, it's a TD9 count. Price is just about to test resistance, so it really needs to clear this area. This area specifically is priced at 23.12. The 2-hour time frame chart, A to B equals CD to the downside, price above its oscillator and change line as well as the top of its profile, so that is looking good. The 60-minute Rhodes Momentum Indicator bottom, price is targeted to 23.28 level. Bar number 7 on a 30-minute chart after Rhodes Momentum Indicator signal. Very likely price is going to go target its breakdown area. That's up at 23.42. If we look at the 15-minute time frame chart, that also had a Rhodes Momentum Indicator bottom. So that's what the charts look like on Cocoa. So the problem here, folks, is you have to trade the futures contracts. There is an ETF out there, I believe it's called NIB, NIB, but it is so thinly traded that it's be very hard. There's very hard to recommend that as a way in. But here are, this is what we looked at each day as somebody either calls in or sends me an email like Jim C. just did about Roku, and we try to understand exactly what the charts are telling us. It's very helpful to take a look at multiple time frames to look for some types of confirming signals. So let's go to Jim's question. Jim writes in, he says, could you take a peek at Roku? You're looking to cover some short call positions out there. So let's go take a look at Roku. And let's first begin let's go over to my black background chart. So give me a moment. Well, first I've got to do this. Change this out. And back to this screen. And now we'll get to our 3-panel, or we're going to try to get to our 3-panel screen. It's going to take me a minute to get there. Sorry about that. And on this 3-panel chart, what we're going to see, as soon as I can find it, is where the profile levels are for the daily, weekly, and monthly levels. So in the case of Roku, we can see that you've got support. So this is what you're looking for. So, Jim, the first level of support inside of Roku is at 414. That is the bottom of its daily profile. Let's see if I can get my other charts here fired up as well. I won't be able to look at that 8-panel. I've got a different way to look at Roku right now. So we'll do it. We'll just have to do it a different way. So, yeah, it looks like 414.40 is a very likely area to get hit. The reason is as of 1:21 in the afternoon, Jim, is we can see first you've got a TD9 count top, bar following bar number 9. Prices pulled back and tested that first level of support. And that was that oscillator and change line out there. And that is priced at, right now as we speak, that is priced at 430.06. So a close below 430.06 should take you to 414. Now, if Roku closes below 414, then what you're looking at is this would signal move back to 333.49. One thing at a time, one moment at a time, and that moment right now says 414.40 is a level that you're looking at. Let's look at a weekly chart here for Roku. What is its signal? Its signal is price could pull back into the 403.48 level, the green oscillator and change line. The monthly chart has a TD9 count. We won't really use that time frame for anything. Let's look at the short term, 15-minute. Is there anything to suggest here that Roku has turned? The answer is no. It had that chance, but what price did basically at 9:45 in the morning out here was price got up, tested, and rejected its TD9 breakdown level. Jim, that was 439.44. So at this stage here, that's a positive for the 15-minute time frame. The 30-minute chart out here has formed a Rhodes momentum indicator bottom. It has been confirmed with this bullish engulfing candle. But what you will see here is prices below the oscillator and change line, as well, a red one, by the way, as well as below the bottom of its profile. So that makes a 30-minute bottoming signal very suspect. You've got to at least close above the oscillator and change line to get our skirts in a tizzy out here. The 65-minute chart does not show any kind of bottoming signal, and in fact says 406.50 is its target. The 130 has got a Rhodes momentum indicator top and says if price closes below 422.82, it's got its sights set on 381.87. And then those 295-minute bars that make up each daily session out here shows us what? Not much. It shows us 416.46 is a key level of support. So your question was, you're looking to cover some short call positions, July and August strikes that you are carrying. This is the information I think that you looked at. I would take it one step at a time. You've got that 414 level. That might be a first place to take some off. But, of course, the price is able to. And watch the volume. Let's go take a look at the Roku volume out here. So right now, it's oops, that was nice. Let's see if we can get that off the screen. Okay. So right now, today's volume, about 2.3 million shares, going against 4.4, going against 8.6. So, 414.40 is looking pretty good as an area where price might hold inside of Roku. So, Jim, I hope that helps you out. Thanks so much for writing in, and best of luck to you on that trade. So no other requests that we've got in at the moment. The phone lines are open, 877-927-6648. And Steve at TFNN.com. Please put radio show question inside that subject heading. So let's go take a look at what's going on inside the equity markets out here. We begin by taking a look at the ES Mini. You'll notice that there is a new profile that is attempting to form. Whether it takes hold or not, I won't know until 6 o'clock this evening. And that is, what you'll notice is that this has formed below price. Folks, when profiles form below price, that is bullish. When profiles form above price, that is bearish. Overhead supply, Okay, in that instance here. So if this does take hold, again, we have another bullish signal. But the real bullish signal inside the ES Mini would come from a close above yesterday's high. And yesterday's high is 43.48. You're at 43.42. So that's what you want to watch. If you're looking for a signal from the ES Mini, a close above that negates its T9 count top and says we're head higher. On the other hand, if we take a look at a close below that level, well, then we're just sort of in a neutral position because you would have price above the top of a daily profile, but you have an active TD9 count pattern. Inside the NQ, there is no topping signal. Yeah, there's an A to B equals CD, and yes, it completed the 1-to-1, but just like we looked at inside of Cocoa out there, the way that these typically, not 100% of the time, but like in the 90% of the time, the way that these confirm their tops or bottoms are with the cavalry, and the cavalry are bullish and bearish reversal candles. Now, the cool thing is there's like about 30, 35 or so different Japanese bullish candlesticks out there. You only need to learn 7. If you learn the 7 bullish, then you'll see the exact opposite are the 7 bearish. And if you learn those, then you'll be home free out there. And by the way, if you don't know what those are, I teach that. There's a workshop that's on as part of the subscriber page out there, and you'll be home free. So inside the NASDAQ, the NQ right now, no bearish reversal signal. That says what, folks? That says the NQ wants to target 15,280. We're at 14,787. That's a beautiful thing. Steve Rhodes with TFNN. Right.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We had a question come in from our Tigers Den regarding the potential corn trade out there from Gary. And Gary's asking which contract is optimum to balance the potential price move higher. And I'm not exactly sure if I understand the question, but I think that I do. And what you need to, so go to the Teucrium, TEUCRIUM webpage, and then select corn, and then take a look at the current holdings. So as of yesterday's close out there, you can see, so they're equally weighted, basically. Actually, there's more dollars by a couple million invested in December of 2022 for the corn ETF versus December 2021, which is 48, and then you got 56 million for the September contract out here. So if you're asked, they're really equally balanced as far as the way that I look at them. So I think that answers your question, Gary, and if it doesn't, my apology. Maybe right back in. That's being monitored by our control room. I don't have the ability to monitor that, plus everything else that's going on out there. But hopefully that answers your question with regard to corn. So back to the ranch out here. We took a look at the ES Mini and the NQ. Now let's take a look at the Dow. So the Dow still has a valid topping signal, and that is back here at the highs from May the 10th. And not until that high gets taken out will the Dow generate any kind of signal that it wants to join the party that's being thrown by the NQ. The ES is thrown in its RSVP, but it needs to prove itself to us. And so we'll see what happens. But in the Dow, it's trading above the top of its daily profile. It's got a couple of different areas of resistance. You'll see a descending trend line as well as a horizontal trendish line out there. But nonetheless, the real key level that the YM has to close above, that price point is 34,895 if it's going to join the rally. In the case of the Russell 2000, pushing it lower today, once again testing the bottom of that daily profile, 2248. Down below that level, you see rising trend line area. So right now, just the Russell 2000 simply consolidating with inside its daily profile. Let's continue surfing around out here. Let's look at the New York Stock Exchange. And we look at the New York Stock Exchange. One of the things that we like to look at is the advanced decline oscillator. That is panel number 2. And in panel number 2, you can see there's a red horizontal line that's at 0. And when that oscillator is below 0, in essence, that signals to us that sellers are the ones that are in control of the general markets out there. Now, you've got to have 2 consecutive closes below that level out here. So why isn't the New York Stock Exchange romping and rolling to the downside? And that answer is very simple. That is because the spot volatility index is still below the 50-day exponential moving average. So even though we have a falling advanced decline oscillator, you can see declining tops out here. I haven't drawn it in. You'll see that the summation in excess is next panel. It switches from green to red. When the advanced decline oscillator is above 0, that's green. When it's below 0, it's red. So it just immediately gives you the indication. But even though we've had that out there and it looks like the New York Stock Exchange is weak, what you need to do is you've got to line that up with the spot volatility index. So let's go take a look at it. Even though the spot volatility index is pertaining only to the S&P 500, if you still do what I just did and you put that on your charts, the New York Stock Exchange and the 50-day, you'll see that when that advanced decline oscillator is below 0, okay, so sellers have some control, but they do not exert any kind of energy until that spot volatility index, this left-hand bottom panel out here, is closing above that 50-day exponential moving average. And that's at 1769. Now, we do see a rising bottoms now beginning inside the spot volatility index. So let me find that chart. I think that's right here. So I know that that's right here, but that's the wrong panel. So let's get to the correct panel out here. So what we are beginning to see, I believe we're beginning to see just slightly a rising, So we've got a spot volatility index that is moving higher. So this is a result of a question that came in. I might have been on Thursday or Friday of last week. I can't recall which of the days it was, but somebody wanted to take a trade in UVXY. And this is one of the charts we looked at. And so to take that trade, we said, ideally what you'd be looking for is both a higher lows bottom inside the spot volatility index, at the same time higher highs going on inside of the S&P 500. So in fact, if the ES Mini is able to take out that resistance level of TD9 count, we'll be set up for that pattern. However, that spot volatility must close above that 50-day exponential moving average in order for there to be any consideration of any significant movement to the downside. That level, 1769. We're trading right now at 1674. So keep an eye on that as well. What else do we want to look at? Well, let's just go take a look at our global flow of capital. As we take a look at this panel, so since there's been 25 weeks, trading weeks, since the beginning of the year. Now, not exactly 25, but really close to it. And here we get to see the rate of change. We get to see the movement for the last 25 weeks. And what we're looking for is we're trying to identify where is it the capital is flowing into. So here we look at the Dow and the S&P 500. Those are up at the two top panels. Then we've got the DAX, the FTSE, the Shanghai, gold, 30-year Treasury. You've got the Nikkei, Hang Seng, Australia, emerging markets. Then you've got West Texas Intermediary, and you've got the Goldman Sachs Commodity Index. Light Sweet Crude, by the way, you already know this, is leading the charge percentage-wise as a rate of change. But right now, we're really more interested in the equity markets out here. Is anything pulling away? Well, the U.S. is out in front. You've got the S&P that's up 16% in terms of U.S. dollars, 13% in terms of U.S. dollars for the Dow. If we take a look at the DAX is doing well also. So interesting that the DAX is doing well at 1382. Out here in Europe. The FTSE, half the performance. The Shanghai, negative in terms of U.S. dollars. So not seeing dollars pour in there. Gold for the year is actually down 2%, so it's certainly not pulling in there. T-bonds are down 1.5% for the year, so not flowing there. The Nikkei is negative, not flowing there. The Hang Seng, not flowing there, it's negative. Australia's not doing too bad. So where's money flowing to? It's flowing into Australia, it's flowing into Germany, it's flowing into the U.S. Is it flowing into emerging markets? Absolutely, positively not. Is it flowing into commodities? Yeah, that's why we spent some time taking a look at the commodity play out there. So the point is that when you see the U.S. leading the charge out here, remember, money comes out of one place. It's got to go to another. That other right now is, in fact, those markets, Australia, the Dow, and the German DAX out here. There's another way for us to take a look at how the markets are performing. One of those ways is this it? No, this is not it. This. In the upper left-hand corner, you're going to see the Dow, which we're basically at new all-time highs. Next to that, to Shanghai. You can see how poorly this is performing. Then you've got the Nikkei. The Nikkei's up at a horizontal trading range resistance level of 3761. The Hang Seng, still not even above its 2008 highs out there. The DAX, again, you can see the nice performance out here with regard to the DAX, the FTSE, declining tops that we've got out there. So that's what's going on in the general view, and it's important to take a look at that. Very much like taking a look at gold price and other currencies, right? So here's another way. I say right, but you say, what do you mean right? Another way for us to take a look at markets and how they're performing. Here is gold. And even though we've got the U.S. dollar index moving higher, which we do, remember we have to take a look at, you can't just look at just that. Well, you can, but if you do, you're blowing your brains out. Don't do that. Instead, what you want to do is you want to understand, hey, how is gold performing inside the major currencies? And right now, gold is higher in dollars today. It's higher in euros. In fact, in euros, you're above yesterday's high. That's bullish. You're higher in yen. You're higher in pounds. So it says, yeah, even though the U.S. dollar index is moving up, that's okay. Gold is rallying on everybody's charts out there. Everybody. Well, those who trade in euros, yen, pounds, and dollars. See Rhodes and TFNN.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So one of the questions in the Tiger's Den coming from John asked the following. What do you make of the ES Mini's repeated rallies that stall near 43.45, which is the apogee pivot point? Apogee is the point in time when during the lunar cycle when the moon is furthest from Earth, and it identifies a very key level. I can't tell you why it works. I just know that it works. So it is a resistance point, absolutely, John. But I have to put that in context of what else is it? I don't just use just that for the trading ideas. We also know that yesterday was a TD9 count top out there, the bar following bar number 9. So that's got resistance at 43.48. What I do know, John, is if price closes above 43.48, as well as that it would be above apogee, the ES Mini wants to make a run for 43.65 or perhaps beyond that. Well, we also know about the characteristics of the ES Mini. This is my synthetic version of the contract, which allows us to get out monthly, quarterly, weekly, accurate profiles out there. We can see that price above all profile levels. If we just take a look at major swing points, you love taking a look at major swing points, looking at Fibonacci expansions. That would be the the February 2020 down to the March of 2021, and you can see that we're above the 1.618 expansion. So that says price might want to go target the 4,500 area as well. So if you take a look at the quarterly chart for the S&P 500, bigger, longer term, this is headed up to 5,000. Quite frankly, it's headed beyond 5,000. I would say 58.27 would more likely be its longer term target out here. If we take a look at, so this is a 4-panel chart. We go take a look at our 8-panel chart and just see what else is going on inside of the ES Mini. So let's go do that. We'll switch over to that. As we do this, we're going to see now we take a look at Stevie's other tools. I have to use a continuous contract here. The eSignal software provides me more flexibility to create and stitch together contracts than the Ninja Trader software does. So here, to get the longer term view, I've got to switch over and take a look at the continuous contract. Not a big deal. You can see that this negated its TD9 count several months ago. You're only in bar number 4. This says that price wants. This says no major significant decline should be ensuing here in the U.S. And in essence, before you had asked that question, maybe while you were typing that question in, John, we were taking a look at the global flow of capital, and we have to consider that as well, which is really what I was trying to put in there. What folks are going to say to themselves, how can this rally continue to go on? Well, first, we're actually in the favorable seasonal period time during the unfavorable seasonal cycle out here. So that would be one way, because typically the Dow on average over 86 years has formed a bottom on June 25th and rallies up into the third week in July. So we're in a very strong period of time right now inside the so-called unfavorable seasonal cycle. On the weekly time frame chart, the only signal that we have out here, John, is potential wave number 7. Prices moving higher doing less relative energy, but price above the green oscillator and change line. It's simply bullish as we speak at the moment. And so no confirmed topping signal at this time. There is a confirmed topping signal on the daily. That's that TD9 count, with yesterday being bar following bar number 1 out there, and that makes yesterday's high really critical. Even though it's a topping pattern, price above the top of the daily profile, prices above the oscillator and change line out here, that's just bullish. Not that it can't pull back. I'm not trying to identify during this show here. I mean, if I can find something that's a top tick or a bottom tick, that would be nice. That's not really my role at this stage here. My role is to be able to share with you what the markets are communicating to us, and to not get too hung up into some of the jostling around. Hey, the Fed is going to release their minutes at 2 o'clock. There's going to be some type of movement in the market. But in order for the ES Mini to generate any kind of confirmed topping signal, price has got to close below that green oscillator and change line. That's currently 43.15. Anything that just pulls back and tests that level doesn't mean that it's absolutely going to hold, in the next moment. I can't control the next moment. But it does say, hey, as long as that level holds, it's very hard to take a swing trade short position out there. In the ES Mini, for its 30-minute time frame, I don't have anything out here that's identifying a top, although I take that back. There is resistance. So not only do you have 43.46, you've got 43.47.75, a TD9 breakdown level. And that's where price ran into resistance. So at about, 10 o'clock, 1 o'clock, 1,300. Yeah, no, it can't be. I'm not sure what just happened with my, this is a 30-minute chart. So I'd say an hour ago or so, price ran into resistance where it should have. So a number of different resistance points. So I don't want to belabor this to you. We really need to see closes below key levels of support. Even on 60-minute time frame, John, you can see that price pulled back this morning and did what? Tested its breakout level, 43.2875. If you look at the 240-minute time frame chart, yesterday was a pullback to test its breakout level of support, 43.09. So yeah, this multi-time frame set of charts, what subscribers get each day, which is just extremely helpful to understand these levels. So to the extent you trade these vehicles, it would be well worth the money to have this information so you can understand what's going on. We've got a caller on the line. Let's go out to Mark in Fort Collins. Mark, thanks for calling. Thanks for holding. How are you doing today?
Good. How are you?
I am very well. Thanks so much. Now I'm going to try to get this all set up here. If you can tell the folks what you're calling about and how I can best assist you.
I'm looking at Natural Grocers Vitamin Cottage, NGVC. Do not have a position. It looks like it's testing and holding some bottoms here. Wondering if you have any thoughts and analysis on it with regard to taking a trade on the long side.
Okay, so NGV. Oh, shoot. I didn't mean to do that. Of course, you couldn't see what I was doing off the screen. But so NGVC. So here's what we know right now. Price is trading below its 3 time frame profile levels, the daily, weekly, and monthly. So the daily profile, the bottom of its daily profile is 1112. The bottom of the weekly profile is 1297. The bottom of the monthly profile is 1159. So what we know is price is trading below support. That says when we pull over our other white background charts, what Mark and I need to see is some type of pattern that is confirming that this might be a bottom. So we're going to begin by taking a look at the daily time frame. And on a daily time frame, there is a Rhodes momentum indicator signal that has been triggered. In fact, this was triggered. This gave a confirming signal, Mark, back on June 28th when it generated a bull sash candle. Yesterday was a doji. Today, right now, is a hammer candle. I don't know what today's candle is going to look like. As long as the lows from that June 28th level hold, that is 1036, you have a Rhodes momentum indicator bottom signal. Now, what this tells you is that your battlegrounds, let's say that this is a bottom or a tradable bottom, which it is. What you need to know is you've got resistance levels. Now, price is below a bullish structured daily profile. if this is only going to generate a counter trend rally, Mark, then you will see price peter out at about the 1133 level. The bottom of the profile is 1112. The center is at 1133. Typically, when you close below the bottom of a bullish structured profile, all counter trend moves either end at the bottom of the profile, but more likely than not, it's at that center level of 1133. So what you're looking for is a close above 1133. That doesn't mean that the battle's over. It means the next battle that you would be in line for is 1175. And a close above 1175 says that there's a change in trend. That's what the daily time frame chart shows us. This did form at the top, a Rhodes Momentum Indicator top. So you've got the same thing at the top, now the same thing at the bottom. Now, before I change over to, let's say, the weekly or monthly charts, any questions so far?
Nope. That's
okay.
Good stuff.
Okay, good. So we're going to go to a hard break here, Mark, if you'd be kind enough to hold on. Then we'll go take a look at that weekly time frame chart. Look for any kind of patterns here. I don't see one, unfortunately. But it doesn't mean that we don't have a bottom. Steve Rhodes with TFNN. We'll be back in just a few.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We're taking a look at Natural Grocers, NGVC, for Mark in Fort Collins. And when we left off on that segment, we were just beginning to take a look at the monthly time frame. And I mentioned, I didn't see a bottoming pattern out there. But during the break, I was able to take a look at a couple of different things. Mark, you probably picked up on this, which was last week. Price tested and rejected its swing point on a weekly basis. That was the September 28th, the week that began September 28th. There were 792,000 shares that traded. Last week was a test and rejection of that on 534,000. So there's really your signal. There's really two signals on the weekly time frame. There's that signal, the volume test of a swing point and rejection. And then we pull over my other weekly chart. We can see that oscillator and change line went from green to red about 4, 5, 6 weeks ago. And what we typically see is price begins to stall, which it is doing, and we see price and that level catch up to each other. And that's currently printed out at 1238. And then when I look at other short-term time frame charts like the 195-minute, we've got a Rhodes Momentum Indicator bottom. The 130, a Rhodes Momentum Indicator bottom. The 65, a Rhodes Momentum Indicator bottom signal. The 30-minute, I don't have anything here per se. But, yeah, there's enough signals for you. Are you already in the trade? Did you already take it?
No, I'm still just kind of watching it. I was wondering, kind of getting your thoughts before I jump into anything. But I like the way it tested the volume on the weekly as well. That was the other thing I was looking at.
Yeah. So, I mean, you're looking for signals. I think you've got everything for, just to use proper position sizing and so forth. It's got its work for it, but it's got all the bottoming signals. And kudos to you for actually being able to pick this out. So I hope that review helped you and will help to make a decision.
Yep, thank you. Appreciate it.
You bet. That was Mark in Fort Collins. Oh, folks, I didn't realize we were in our last segment. That's the end of the show, and I didn't get a chance to go through a couple of requests that are out there. We'll make sure that we do that tomorrow. But stay tuned for 2 more wonderful hours. Your favorite polar bear, David White, he is up next, the Power Trading Hour. Tom O'Brien, he'll bring us on home, and I'll be back with you tomorrow on Thursday. Have a wonderful Wednesday, folks.